Picture this. You wake up on a Sunday morning, check your phone, and watch $3.21 trillion vanish before your eyes. Not slowly, not gradually, but in a brutal, relentless cascade that's leaving 95 out of the top 100 cryptocurrencies bleeding red. Welcome to January 19th, 2026, where the crypto dream is facing its harshest reality check in months. Right now, as you're listening to this, Bitcoin has crashed through a critical floor. It's sitting at $92,532, down 2.7%. But here's what should terrify you. That's not just a number. That's a broken promise. Bitcoin just shattered the $94,000 support level that traders have been desperately clinging to like a life raft in a storm. And the analysts, they're not sugarcoating it anymore. If buyers don't show up and show up fast, we're looking at a free fall to $88,000. That's another 6.5% drop from where we are right now. Ethereum isn't faring any better. Down 3.6% to $3,192. The entire market cap has contracted by 3% in what can only be described as a weekend massacre. And you want to know the cruel irony? Tomorrow's a federal holiday. Martin Luther King Day means Wall Street is closed. Traditional markets are taking a break while crypto never sleeps, never stops, and right now, never stops falling. So what triggered this chaos? Two words that have been haunting investors for weeks: tariffs and geopolitics. Over the weekend, whispers turned into shouts about new tariff announcements and international tensions that have nothing to do with blockchain technology, but everything to do with investor confidence. When fear enters the market, it doesn't discriminate. It sells everything. And crypto, with its 24/7 trading and global accessibility, becomes the first casualty. But let's dig deeper, because this isn't just about one bad weekend. The data tells a more complex story. U.S. Bitcoin spot ETFs just witnessed a massive exodus. $394.68 million fled these funds. That's institutional money. That's the smart money. That's the kind of money that doesn't panic over a tweet or a headline. When that money moves, it's sending a signal. It's saying something fundamental has shifted. However, and this is where it gets interesting, Ethereum ETFs are telling a completely different story. For 5 consecutive days, money has been flowing in. $4.64 million came in, continuing a streak that suggests some investors see opportunity where others see catastrophe. It's the classic tale of two cryptocurrencies, two philosophies, two completely different bets on the future. Now, while traders are sweating and charts are painting pictures of doom, something fascinating is happening in the background. The regulatory landscape that's been a nightmare for crypto since its inception is finally starting to shift. David Sachs, the White House crypto advisor, just dropped a bombshell. The Digital Asset Market Clarity Act is getting a Senate committee markup this month. January 2026 could be remembered not for the crash, but for the regulatory breakthrough that legitimizes the entire industry. Think about what that means. For years, crypto has operated in a legal gray zone, with the SEC treating some coins as securities, others as commodities, and everyone confused about what's actually legal. This bill could change everything. It could provide the clarity that institutional investors have been demanding before they commit serious capital. It's the difference between gambling and investing, between speculation and strategy. And speaking of strategy, let's talk about Steak and Shake. Yes, the burger chain. They just announced a $10 million Bitcoin purchase for their corporate treasury. At first glance, you might think that's a desperate publicity stunt. But look closer. This is a 70-year-old American restaurant chain with hundreds of locations saying that holding US dollars is riskier than holding Bitcoin. Let that sink in. Traditional businesses are watching their cash lose value to inflation, and they're choosing crypto as the alternative. That's not speculation. That's a statement about the future of money. The technical analysts are calling this wave 4 of a major bull cycle. If you're not familiar with Elliott wave theory, here's the simplified version. Markets move in waves. 5 waves up, 3 waves down. Wave 4 is the scary one. It's the consolidation phase where weak hands get shaken out and strong hands accumulate. It feels like the end, but it's actually the pause before the final surge. If the analysts are right, this current pain is setting up for Wave 5, the explosive finale that could push Bitcoin to new all-time highs. But here's the reality check. Nobody knows for sure. The same analysts who are calling this wave 4 were calling for $100,000 Bitcoin last month. The same institutions fleeing Bitcoin ETFs were pumping them 6 months ago. The crypto market has a way of humbling everyone who thinks they figured it out. What we do know is this. Volatility is the price of admission. If you can't handle $92,000 Bitcoin after seeing it at $100,000, you definitely can't handle it at $200,000 or $500,000 or wherever the true believers think it's going. Right now, 95% of the top cryptos are down. That's not a correction, that's a reckoning. But corrections don't mean the end. They mean the market is repricing risk, reassessing value, and preparing for whatever comes next. The question isn't whether crypto will survive this weekend. It's survived worse. The question is whether you have the conviction, the strategy, and the stomach to navigate what comes next. Because while everyone's watching the price crash, the infrastructure keeps building. While traders panic sell, companies like Steak and Shake are buying. While retail investors check their portfolios with dread, regulators are finally providing the framework for mainstream adoption. The disconnect between short-term price action and long-term fundamentals has never been wider. So here we are. $3.21 trillion in market cap, down 3% in a day, with $94,000 support broken and $88,000 looming like a threat. Bitcoin and Ethereum are bleeding, ETF money is fleeing, and the charts look apocalyptic. But beneath the chaos, the pieces for the next phase are quietly being put in place. The Digital Asset Market Clarity Act, corporate treasury adoption, sustained Ethereum ETF inflows despite the carnage. This is crypto in 2026. Beautiful, brutal, and utterly unpredictable. The only certainty is that by tomorrow, everything could change again.